Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the bullish scenario on the 4-hour chart, where we're looking for an impulse to the upside, this wave 4 to finish before then one more wave 5 to the upside. A common target area for this wave 4 is the green box here between the 236 and the 05, taken from the low to the high 3, giving you a target area between 50.3k and 47.3k. The 0.618 is an invalidation at 46k, and the rare target for a wave 4, which is very shallow, is between the 146 and the 236, which is between 51.3k and 50.2k. As mentioned, in this scenario, we're then looking for still a move towards the upside, which would be nice because then we also fill the weekly gap. On the weekly time frame, we have a gap over here sitting between 52k and 53k, which we entered. We even closed a week side, but we haven't yet filled the gap. And we also have the monthly gap, which we touched for the third time over here. High probabilities to fill the gap, and the monthly gap top is exactly the same as the weekly gap top. Would be interesting to then move to the upside, at least reach 53.3k, if not higher, because we do have some extra resistance above. The first area of resistance above the monthly gap top is between 56.8k and 57.3k, and then we are going to reach the 60k area, 60.1k to 61.6k. If we look for support, then to the downside, we have hit the 2-hour gap support 2 times now. Now, the more often you test this area, the lower the probabilities it will hold. If price moves to the downside once again, probabilities are high to fill the gap and move to the blue support we have over here, which is also in the common target for 4, sitting between 49.1k and 49.8k. If we then zoom into this wave 4 structure here, then the bullish scenario is that we have a finished WXY sideways double combo. Zigzag in W, corrective X, and then a flat structure in a wave Y, looking for a wave 1, 2, and continuation to the upside. The invalidation for this scenario is if price moves below this low first. The bearish scenario on the 4-hour chart is that we are looking for a bigger flat, a 3-wave structure in a wave A, 3-wave structure in a wave B, and then a 5-wave C to the downside, which preferably moves below the low of this wave A. Common target for wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low A, giving you a target area between 53.1k and 51.6k. Now, inside this wave B, we are then looking for a 3-wave structure in a wave A, B, and a wave C, meaning we want wave C to end over here. If we then zoom into the 15-minute time frame, the way to end wave is over here would be with a 5-wave impulsive structure, and in this case we don't have a nice clean impulsive structure to the upside because we have a lot of overlap, and the only way to get some sort of a 5-wave move in here would be an ending diagonal. But as you can see, it is an ending expanding diagonal, and an expanding diagonal is a lot more rare. By far most common, a contracting diagonal. The moment we see an expanding diagonal, it never has the highest probabilities unless all of the other scenarios fail, which therefore means that the probabilities for this particular scenario, the end of a wave 5 over here, and much more downside to come, has a lower probability compared to the more bullish scenario where we are looking for wave 4 and one more high to be made. If we look at the CVD divergences, then we have bullish CVD divergences, higher low in price, lower low on the CVD. The target would be this high, and the invalidation is price taking this low. However, I do like to see a bit more local signs of strength as well, and that is because as price has been moving to the downside, we consistently saw bearish CVD divergences building as well. So on the 50-minute time frame, we can see higher low in price, and we can see a lower low on yellow as well as a lower low on blue. But if I then switch to the 3-minute time frame, then you can see that here we had a bearish CVD divergence. We had over here a lower high on price but a higher high on the yellow CVD. Also here we had lower highs on price, right, but a higher high on the CVD, and this is a repeating story on the 3-minute time frame at the moment. Once again, lower high on price, higher high on the CVD. CVD. So I definitely want price to move up a little bit further and invalidate some of these bearish CVDs, because the 3-minute CVDs are very, very relevant. You can have a 15-minute bullish CVD, but if on the 3-minute you constantly have bearish CVD divergences, these do have a priority. So if we then look at the probabilities of the different scenarios, then on the 4-hour, the probabilities remain at the moment higher that we are in a bullish 1, 2, 3, 4, 5 impulsive structure. We're looking for this wave 4 to end before then a wave 5 towards the upside. However, it has to be said that we are very high in this impulsive move to the upside, so late longers have to watch out. Early shorters also have to watch out, because the probabilities are higher for at least one more high in then 5, and we continue to observe the local price action over here. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.